Happy morning, everybody. Welcome to this first international webinar Vidyasagar Women's College is organizing. My name is Adesh Kumar Jain. I'm the financial controller and the management member of Vidyasagar group of institutions. I will just hand you over to the principal to introduce the guest today. Dr. Shalini, can you just come online, please? Dr. Shalini, can you switch on your video?
Yes, sir, I will. Happy morning to all of you, to all the participants. On behalf of the management, faculty, students, and on my own behalf, I welcome all of you for the international webinar. It's a pleasure to have all of you with us here this morning. And I do take the privilege of welcoming our speaker, Ms. Leela Varadharajan, who is a finance instructor in Oregon State University. She holds a MS in computer science and MBA in finance from the University of Buffalo, New York. Prior to teaching, she had an illustrious career as a risk and quantitative analyst in the capacity of Assistant Vice President at Citicorp. As an instructor, one of her areas of interest is to help students and community achieve financial independence via financial literacy. I welcome you, Ms. Leela, on behalf of all of them once again here. And I now put it across to Ms. Leela to take over. Thank you, Ms. Leela. Thank you, one and all, for being here. Have a good day here.
Good morning, everyone. It's really a pleasure to be here and presenting in this webinar. And I thank Vidyasagar Women's College for giving me this wonderful opportunity. And though I say good morning to everyone, it is actually opposite over here. I'm webcasting from Oregon, Corvallis, Oregon, where we have Oregon State University. I teach there. I'm a faculty there. I teach finance as Dr. Shalini introduced me. What I want to do now is start my presentation. I'm very comfortable presenting with the PowerPoint. So if I may, I will start my presentation with the PowerPoint, if that's okay. Is that okay with everyone?
Yes, please.
Yeah, that's fine. You can carry on, please.
All right, thank you. So I hope everyone can see my PowerPoint. The main topic that I will be presenting today is technology in finance. So that's why I kind of combined finance and technology in my slide. And my talk is going to be geared towards that. Just before starting to present this webinar, I would like to tell about myself and where I come from in actually introducing this main idea to you. My education is BS in Electronics and Communication, which I completed in Madras University, Satyabama Engineering College. And then I went on doing MS Computer Science and then MBA Finance in the University of Buffalo, New York. As you can see, my education is kind of in different fields. I started off with electronics and communication and then went to computer science and finance. Right here, I have both technology and finance. And there is a lot of diversity in my education. And one of the most important theory in finance is diversification reduces risk. Well, I kind of reduce my risk in the sense that I enhance my opportunity in the outside world by having a very diverse background. Let me talk about my experience. Well, I had to show that I will be using some of my MBA knowledge in work. So I started off as a project manager in supply chain management. And then I went with joining as a quantitative analyst and then risk analyst in Citigroup. Why I highlighted both of these careers is that this is where exactly I had finance and technology experience. And this is mostly where I experienced technology. So my background in education as a MS Computer Science and MBA very much helped in my work. Uh, Citigroup is a very big organization. And the department that I started in as a quantitative analyst is fixed income securities. And where did I bring my finance knowledge in it is I was working with bonds, fixed income securities, and they were exotic bonds called mortgage-backed securities. The very name explained what kind of securitization happens over here. One end of the this process, securitization process, is the creation of mortgages. On the other hand, these mortgage-backed securities are packaged and they're sold to investors. In order to make these mortgages sellable to investors and also funding mortgage market through investors, both of these were possible only because of technology. And that is where we came as a quantitative analyst. What we basically did is model these deals. We took the data from mortgages of different customers and we packaged up, pulled it, and securitized this, and then presented this to the investment world. So one thing that I want to tell about career is wherever you go with your financial knowledge or any banking industry or any kind of financial industry, there is always a steep learning curve. And that was the phase I was in the very beginning. But after some time, we become very good at what we are doing. And that steep learning plateaus. And that's when change should happen. When things are stagnant, and when you think that you're not going to be offering anything more, then what you have maximized on your capacity, you need to make a shift. And that was the risk analyst job that I pursued. Risk analysis, what it does is it manages risk. But one interesting thing happened in my career. I joined the quantitative analyst job securitizing mortgage-backed securities at a time where the mortgage markets caused financial crisis, the subprime crisis. And when that happened, most of us at work, we were afraid we are going to be losing job. But the management came back and told us that we were much needed than any time. We had to model the loss for deals for losses. That's where we became very valuable. So whatever education you have, it's always going to be useful if you acquire the right kind of skills that is needed in any financial crisis or any situation that you are in. So banks and financial institutions were considered to be too big to fail at that time, and Federal Reserve had to bail them out. The one problem that financial institutions had was they did not focus on risk management. And I can say this for a fact because I was working in Citigroup and the risk management department there just had about 10 employees. But after financial crisis happened, there needed more regulation and the bank started thinking big on risk management and they expanded the risk management department and hired more people. And that's where I made the shift to being a risk analyst. And risk analysis have three main areas. One is operational risk, one is credit risk, and one is market risk. Operational risk deals with the operation of the firm. Citigroup is a big firm and it has a lot of operational management. And then credit risk deals with all the investment in what Citigroup make, and especially credit risk of exotic investments that it makes with counterparty. What happens if Citigroup is going to default on its payment? What kind of risk exposure the counterparty has, or what is going to be Citigroup's exposure if the counterparty fails? So there is two ways of managing risk. So this was what I was doing. And also what we did was we started having a lot of regulatory reforms at that time, because this was after financial crisis 2007, 2008, and the banks started making a lot of risk management decisions. So I was working on a Federal Reserve project where banks were supposed to have a lot of capital reserve, and also World Bank project, which was a Basel I and Basel II, which was also a regulatory project. So this is what I mean by technology in finance. And though my concentration was finance, without technology, all of these firms will not be able to achieve what they are doing and how they are driving the financial industry. Well, after this was for 6 years, and after that, I started teaching finance in Oregon State University. The areas of interest are financial institutions and investments and fixed income securities and basic finance for students. And now I have started focusing in personal financial planning, and especially at a period like this when we are in economic downturn, it is really important that we pay a lot of attention to our financial needs and know how to manage our personal finance. One of the things that has amazed me is that, be it a country's finance or a corporate finance or a business finance and personal finance, all of these operate under the same rules. We are all of them have an operation that is going to be following basic financial theories, managing risk and maximizing return, making sure we have enough planning. All of these are going to be very important financial results. Well, on my next slide is, this is showing a bank, a traditional bank. And the reason that I have a traditional bank over here is things have changed in the banking industry. Banking is necessary, but not banks. And this is what Bill Gates said in 1994. And that is exactly true, because these days, not many of us make that many trips to bank, especially at a time like this when we are under lockdown. Most of us are comfortable at home doing our banking through a mobile phone, using the various apps that we have to do the bill pay, to deposit money, to manage our money and make payments. So all of this is carried out at online in your device, and it is being made possible because of the technological advancement in finance. And that is where digital banking is coming. Digital banking is not anything new. It's been existing over here. And what the industry has done is it has revolutionized the digital banking system, in the sense that money deposits, if you think about just this one item over here, how we used to deposit by going to a physical brick and mortar bank and then going to the teller and getting the check signed and making the deposit, had changed from that to actually having a drop box. And then from that to now it has come to a point where you can just take a picture in your cell phone and make the deposit. So it has come to that kind of a revolution. Account management, the same thing. The bill pay, ATM has provided easy access to money, so it does not have to be a trip to the bank, standing in the line and waiting. And the most innovative of this is open bank. Open banking offers numerous advantages to consumers. It is capable of sharing data to third-party budgeting apps and using management tools, money management tools, to different small financial organizations. So open banking has become a new trend where banking information is shared with other apps, and that way people are able to manage their own money. And same thing goes with online payments. Online payments, and mobile payments and point of sale payments all in one. These kind of technologies has made it very easy, especially for younger digital crowd who buy goods from around the world with a tap of a phone screen, and which is delivered through Amazon in few hours. So that is being made possible because of technology in finance. So these are nothing new that I'm introducing to you. It has been there and it has been used by all of us. And we know how technology has been improving our customer experience in financial industry. But let me now introduce you to what is finance and technology actually means. And that is a term which is being used in the industry a lot these days. That is called fintech. What fintech means is finance plus technology. New financial industry is defined by fintech. It applies technology to deliver increased value to customers. And this is an emerging technology. And this whole talk, I want to focus on this one technology because this is going to be the future. This is how finance is going to be revolutionized. So what is a fintech world? When it comes to the world of fintech and emerging financial technology, there is a progression that has happened in waves. The first wave is created by innovators and spotted by early adopters who see opportunities in technology to solve current problems and make life more convenient and efficient. The second wave is the early majority adopters who establish that technology as a solid and legitimate solution in the society. And the third wave is followed by late adopters. These people are called laggards, and they're very receptive to change, and they want to bring about innovations and new technologies, but they are late in the game. And what fintech has done is it has added an extra layer to technology in finance. It has added a much bigger advancement in terms of introducing blockchain, in terms of adding a sophistication to payments, in terms of making exchanges much more efficient, research which is widely available to everyone, and digital money transfer, which is going to take care of the security issues and adding a lot of sophistication, online banking sophistication, investments, how it has improved, and also crowdfunding, which is providing funding for all the different ideas. So this crowdfunding and P2P lending are all new things that has been made possible because of fintech. So let me tell you where it started, like when it started. It is actually, though it is an emerging technology and we are talking about it right now, I can say that we can go back to 1950s. The first story of fintech started then, and it was Dr. Frank McNamara in 1950. What he did was he was in a restaurant and he was very embarrassed because he didn't bring his wallet. And so, sorry, I have to go back to the slide. So what he did was luckily his wife had the cash to pay, but this kind of motivated him to bring the change where cash is not necessary when you're going out to eat or to buy and do different things. And what he did was he came up with a card mechanism. So card was used. That was the first Diners Club card. And that was the first change that happened, where this was adopted by the very well-known Bloomingdale. And he predicted that in the future, finance is going to make transactions cashless and everything is going to be card oriented. And we are seeing this in our lifetime, how credit card has, the usage of credit card has risen and cash has become obsolete. And that is when fintech was first introduced in finance. This you can say is the story of fintech. And The fintech is now using much of blockchain to advance its ideas. And so I will talk a little bit about blockchain. Well, I gave you a little history on where fintech started. It was a motivation by a person who knew that he couldn't use his cash. And so he came up with the idea of having a card transaction. That was finance and technology idea, right? But what is the motivation for the inventor of blockchain? The inventor of blockchain, who is called Satoshi Nakamoto, it is mysteriously, his motivation is unknown. And he did not have any clear reason for creating the blockchain. But why it has become very well adopted in financial technology, because of the key characteristics that it has. As you can see, what blockchain offers is that it cannot be corrupted. What do you mean by this? It is validated by quite a number of computer networks that there is no corruption possible. And it is a decentralized technology because it is present, it is residing in a network of computers. And it has enhanced security because it is encrypted. And it is having a distributed ledger. It sits on a network of computer. It has to have consensus with all the computers. And the transaction in blockchain is very fast. There is fast settlement because we are eliminating all of the intermediaries in this process. So transaction goes through intermediaries, banks, one more bank, or another kind of financial agent who is going to make things happen. With the blockchain feature, we are actually eliminating all of the intermediaries. And how you can think about blockchain is you can think of it as an internet of money. How internet has made it possible for people to communicate with each other. Same thing with blockchain. Blockchain has made the money as an internet where transaction is made seamlessly possible. According to the fintech finance, what blockchain is capable of doing is seamless cross-border payment, and the current system used for moving money across global borders are having a lot of friction. And what blockchain has offered is all these additional features, which is going to allow it to have a seamless and fast and secure, accountable feature, which was going to advance financial industry much faster and much efficiently. So where are we actually using the blockchain technology in finance? This slide kind of gives you an idea where it is used. It is used in all possible areas in finance. State, international transfers. Now, international transfers, as I said, there is no need for you to worry about frictions in cross-border transfer, because with encryption and with blockchain, you are able to get rid of all of the frictions and do a seamless transfer. IT and business re-engineering to support all of the changes. This is common to all industry, just not financials. Blockchain can be used in all industrial, IT, and business models. Securities instruments, securitization process, syndicated loans, clearing and settlement, asset ownership, bond sales, digital receipts, all of this pertains to the investment world or the financial world. And this has been what major financial development has been about: securitization, coming up with new financial instruments and syndicate loans. Why this is important? What financial market is good at is transfer of funds from the surplus to the deficit. And with blockchain technology, this is going to happen with no inhibition at all. It's going to happen seamlessly. And insurance industry is also going to use blockchain to make a lot of emerging technology changes, in the sense that insurance is dependent on it is data driven. It depends on the data, and combined with artificial intelligence and automation. What insurance is aiming to achieve is um, making funds very efficient for both the insurance company and also insurance payments. And mortgages and wallets and exchange and simple transfer payments, all of which are made possible by blockchain. Well, coming to investments and what technological advancement we have, think about a robo-advisor, how the robo-advisor has evolved. So the 1.0 robo-advisor was probably an online questionnaire asking different questions online. These are all that customers will answer, and they will choose a product which is listed. This was a very preliminary version of a robo-advisor. And then it moved on to the second version, which is a little more advanced than this, where you have this questionnaire where you already know what kind of customer you have, what is their risk appetite, and with that you move on to managing their fund and adjusting and rebalancing their fund, making fund transfer for them, and also making the risk management decisions for them in terms of allocating, investment based on risk that this particular customer has. And then 3.0 version is going to have all of these features, plus it is going to use an algorithm-based adjustments, rebalancing all of the investments, and using a set of rules. The 4.0, which is the most advanced robo-advisor, which is going to have not just artificial intelligence, but also amplified intelligence. Well, we all know what artificial intelligence is. It's going to be based on machine learning and how data is conceived. It is trained, and it is trained to make decisions that is going to drive results. But amplified intelligence is a level more than the artificial intelligence. What amplified intelligence does is it fully automates and does everything for you. It makes investments, it learns your algorithm, and it makes automatic asset allocation. That is how much robo-advisor evolution has advanced in wealth management. Well, investments is going to be about asset allocation, security selection, rebalancing, and risk management, all of which is now made by technology, and AI and robo-advisor is a very good example of that. They use chatbot and they use voice recognition software in order to collect the data, and asset management is modeled by taking big data and converting it into the smart data, and they use machine learning and artificial intelligence to go into amplified intelligence level. Well, I said that fintech, which is the emerging technology where finance and technology is kind of making a combined effort to improve financial experience for all of the people who are in finance. The one of the most recent advancement is the crowdfunding. What crowdfunding does is it is funding ideas, and the way this works is getting funds from a lot of people using social media or any kind of online application where we have numerous investors who are investing in this idea. One of the example of this is a person who wanted to have crowdfunding for a potato salad recipe. That is how basic it was. He wanted just $10 for that. But what ended up happening is that he raised $50,000. That is how powerful crowdfunding is. don't underestimate what one person's generosity will do. That's a great example for crowdfunding. And this crowdfunding has made possibility for entrepreneurs what they are willing to do for the community by getting funded, all of their ideas funded. The next new idea is the P2P funding. What P2P funding does is it is peer-to-peer lending. Individuals are going to be willing to lend, and there are individuals who are in need of money. And this P2B platform makes it possible. These lenders are going to choose their borrowers. And the way that this will happen is through a profile that is going to be verified by the P2P platform. The loan agreement, which is going to be between these two parties, is set up by the P2P platform. The lenders have a choice. They can choose how risky they can go with lending. And this lending is going to be based on the credit worthiness of the borrowers. And how much interest that they pay is going to be based on how credit worthy they are. So lenders can choose to be very risky and lending to people who have less credit, or go easy and be safe and lend to people who are not that risky. So based on that, they will be getting a return in terms of interest payments. That's how the P2P platform works. It is nothing but peer-to-peer network. Okay? And this idea has been gaining a lot of interest in financial industry. Now, this slide, it talks about disruptive. Disruption or disruptive, the meaning of that word. Why did I bring about this slide which talks about the meaning of disruption when we are talking about finance and technology? Well, this is much needed in the financial industry in bringing about technological change. Why? What is the meaning of disruption? If you look at this word disruptive, it has all negative meaning, like it is troublesome, unruly, badly behaved, rowdy, disorderly, and so on. But what we are going to be applying in terms of finance is we are going to be looking at this meaning, which is innovative and groundbreaking. Disruptive means being innovative and groundbreaking. Breaking a disruptive technology into the market is not very easy. We have to do this. We have to do this to make a change. And that has been very much the trend. Some examples of disruption in action is Blockbusters and Netflix. So Blockbusters, they used to be a brick and mortar store, and they rented videos, and they used to have all of their customers come to the store, choose the video, and make that an experience. But they went bankrupt in 2010. Why? Because of Netflix. What Netflix did is it was doing the same thing, selling videos, but not through a physical brick and mortar store, but mailing it to customers. It was mailing to their house. It made it more convenient. And later on, now we know what Netflix is doing. It has come completely online, and especially in a lockdown situation like this, people like to sit at home and watch Netflix. This is the disruption which was brought by Netflix, and this is what we are talking about, disruptiveness. And if there is an industry which is not picking this up, they will go bankrupt. And then another example is Sears and Amazon. If you look at Sears and Amazon, both of them are kind of the same industry. They are going to be selling everything that what people need for a day-to-day life, appliances, anything that is going to be needing for household, function. But Sears again was a brick and mortar store which went bankrupt in 2018. Amazon, on the other hand, became very successful because it delivered what customers want. They wanted to stay home, get the delivery fast. They wanted to make their e-commerce much more user-friendly, more easy, more convenient for them. And convenience is what was offered by Amazon to customers. And this is another example of disruptive. So now you kind of get an idea what disruption it means, especially in technology. If we want to make a change, and it has to come with force, and it has to happen very fast. Otherwise, the industry is going to go down online. And so what we are going to decide in 2020 is to embrace the disruption. Be it in industry, financial industry, or personal finance, we want to embrace disruption and bring about change. What industries, financial industries, be it banking or insurance company or pension funds or investment companies or any other corporate companies which is going to be needing financial improvement, all of their financial technology should disrupt and reshape in terms of the business model. And what they need to focus on is they need to update the operating system, make it fast and efficient and better adaptable. And they need to simplify legacy system. And this has been an issue with a lot of companies. They are not willing to let go of their legacy system. So with the advent of fintech, and with the emerging technologies such as blockchain, they have to make an adjustment. They have to bring in advanced robotics and AI system to prove this better service, bring about better service because they want to achieve this lower cost. And use of smarter technology to handle customer need. And at the end, what every industry wants, be it a financial industry or a non-financial industry, is satisfying customers. And AI will convert this big data to smart data in order to bring this big change in the customer need. And building architectures that connect efficiently. And this is again possible through blockchain, seamless connection and bringing in financial technology. What blockchain has offered is not only accountability, but also security, because it is encrypted and it is getting rid of middlemen. That's why we want to bring in that change where you're building an architecture which is more efficient, and build resilient risk management system, which is going to be managing cybersecurity to protect customer data. And cybersecurity has become a number one issue in risk management. So how do we actually do this? How do we bring about this disruption? How do we make room for emerging technology? This is not easy, as I said. And especially when you take this change has to happen in industry, financial industry. It goes in 3 stages. First is the exploration stage, and that's exactly where blockchain and amplified intelligence is sitting. So it is still in the exploration phase, and people are, because it is unproven methodology, and and it's also not easy for all the industry to adapt a blockchain, because it is not, if you have to develop it, you need to do it on your own. It is not readily available for all industry, and small businesses suffer because of that. So this blockchain technology and amplified intelligence are still in the exploration phase. And if you look at the conviction phase, it has gone to this phase is the next, where you can think about robo-advisors. And we are seeing that in investment world, where we have robo-advisors. If you go into the retirement system in your company, if you join a company, you want to have your retirement investment, what option do you have? You can choose a robo-advisor, which will make the choice of investment for you based on your profile. And search-driven data access, all of this are going to be it is there, but it is not completely accepted. Not all industries have this. And the adoption phase is where most of the industry has adopted these technologies. Machine learning for compliance, and compliance is a big thing in financial industry. And each country has its own regulatory needs. As you know, that US is having a lot of regulatory needs based on its history of financial crash and the financial crisis, the Dodd-Frank Act and the Sarbanes-Oxley Act. All of those compliances are there, and machine learning is used for fulfilling the compliance of the financial industry. Cloud computing and chatbots, these are all have already been adopted. Most of the financial industries do have these. Well, what is the driving force of these emerging technology? I have pointed out few of the themes that are the driving force for the emerging technology. One being the data-centric. Companies are collecting more data and utilizing it for a strategic asset and critical enabler, creating virtuous cycle with emerging technology. Amplified intelligence is a higher level of intelligence when you are looking at AI. This is one step further than that, and it is having computing capabilities and data to amplify human intelligence. And digital experience is going to build more intuitive and engaging, collaborative and seamless digital interaction for customers. And smart automation, which includes robotic process automations. And this is more used more in payment systems and digital banking. And this is rule-based and it is predictable. It almost, this RPA, which is robotic process automation, is more for services that are repetitive. And if it is going to be based on the algorithm of if this happens, then what you have to do, that kind of very simple algorithm. Blockchain is a sophisticated, immutable, distributive ledger that enables trusted peer-to-peer transaction without the need of intermediary. That is the main advantage of blockchain. It just gets rid of all of the intermediaries, and with that, eliminating the intermediaries, what we have achieved is lower cost, faster service, and on top of this, the encryption makes it a very secure transaction. Well, we are almost towards the end of the presentation. And what I want to bring in at this time is what kind of careers are we looking at in the for future in finance? And most of us are interested in this topic. Like what is the future going to be like if we are looking for careers? I would say, because, and I may be biased because I have this finance and technology background, and this is going to be a great combination for career. Why? Because we know that automation is going to go to a different level. It is going to go take a different, advanced step in finance, where all of the repetitive jobs in financial industry have high probability of being automated. And when those jobs are taken, we definitely need someone to manage automation. And that's where technology comes. Managing technology, managing automation, that's where most of the jobs are going to go. And compliance deduction and legal search, all of this are going to be going automated. And one area where I think there is a lot of opportunity, where even though there is going to be a technological advancement, humans are needed to make decision, is going to be financial planning. Financial planning, be it for personal financial planning or corporate financial planning, it will need a human expert to give opinions, and human expert to give their intuition and management. Why? Because AI won't do the job. Why do I say this? Financial planning is a combination of just not financial planning, but it is going to be a combination of emotional intelligence. Those saying that technology is going to drive the financial industry, which I I will say that this is going to be the future, but that doesn't mean that we do not have a role in this. We have a bigger role now. We are going to be in a role where we are going to be uh, directing the technology or controlling the technology, managing the technology, right? And there is always need for human interaction, empathy, and human emotion. All of this plays a big role. And this has, and even while starting the presentation, I said, how many of us go to the bank? We do have people going to the bank even today, because money is very sensitive matter, and not everyone is comfortable dealing it online. So there is a need for human involvement in financial industry, and every client is unique. And planners, financial planners should understand that client need and manage money. That's why financial planning is going to be one of the fields where advisors are needed. Based on the individual's need, they're going to do the financial planning. Individuals' emotions. Behavioral finance has taken a big role in financial industry. What behavioral finance addresses is psychology of investors. All investors are not rational. We are irrational people. We make irrational decisions. Saying that we need the help of experts to guide our financial decisions. So that is where all our financial skill and knowledge is going to play a bigger role. Planning based on clients' needs and expectation is going to be very helpful in the future. Robots and automation cannot challenge human emotion, and regulatory compliance issue cannot be handled efficiently by AI as well. And financial industry is full of regulations. They are going to be having a lot of regulations facing it, and more, like if you think about one event that happened, that is the financial crisis, which globally affected all of the financial industries in the world. What happened after that was a lot of regulations that came to fix that. So it is going to be highly regulated. And how do we address this? We need to have people trained in a way that they will be able to manage this compliance issue. And AI cannot do that. And that's why I say that AI won't do the job. We are still needed in the industry, though I started the presentation saying technology plays a big role. We as humans have a bigger role than technology in financial industry. And that's the end of my presentation. And if you have any questions, I can go ahead and answer at this time.
Hello, Leela ma'am. Can you, stop your screen share, please? We will go.
Oh, sure.
Yeah.
Yes.
1 second, ma'am. Just give me a second.
So I did not see the time yet. How are we doing on time?
We are bang on time, 48 minutes. So it's like you committed 60 minutes, you have finished earlier. So that's good in one way, because we will have enough time for the questions. There are about 20 odd questions in the section, and I have a few of them to ask. Just a second.
Great. This was awesome. Thank you so much. Very informative.
Oh, thank you.
Just a second, ma'am. Just a second.
Thank you very much. Yeah, I see a lot of, chat.
Okay. So, before I start asking the questions asked by the participants, I'd like to thank you. And it's astonishing the way you have taken the presentation. 48 minutes from blockchain to robo-advisory to, everything has been covered, to the financial planning. It's like that shows the kind of expertise what you have in this field. So thank you very much for this wonderful presentation. People started slow with the questions, but I think they have some very good and valid, interesting questions. What is the scope of career in fintech? This is a question asked by Ms. Chauhan, I think, Frankie Chauhan. So can you just take this question?
Yes. So as I said, fintech is an emerging technology, and that is going to be the future. And well, saying that, I will say that all of the financial jobs are going to be based on how well you are familiar with this technology, fintech technology. And I always feel like, just having a financial background is okay, but if you are able to combine it with the technology, that is where the future is. That is where you're going to be very valuable. And then that's when you will be needed most. And my experience wise, I can say this because when the financial crisis happened and we were thinking that we are going to lose our job, my skill is the one which saved my job. And that was a very good learning experience for me. We started modeling all of the deals with losses. So technology plays a huge role in your life. So you need to be very familiar with that.
Thank you. So the next question is from Dr. Aruna Devi. How safe is the current banking vis-a-vis the blockchain security, what we are talking about?
So blockchain, as I said, is there are three ways at which we are looking at blockchain. The first wave is the innovative wave, where you just like fintech, we are using it from problem solving, especially the current problems. And the second wave is when the people are using it as a societal need, like need in the society. And the third wave is going to be a wave in which where there's no other go, they have to catch up with the technology, right? But blockchain is pretty new, okay? The reason that I'm saying this is it is as the three phases in technology, it has not been adopted yet. It is still in the testing phase. And the familiarity in the industry with this is not because it is not widely used, but it can be used for advanced technology. And the security wise, the cyber, the cryptocurrency, the encryption that it has, that makes it very secure. And the mechanics of which the blockchain works. And if you think about the mechanics, blockchain is validated by a group or a network of computers. And that validation should be there for it to advance into a block and then transfer to the next level. So that's where the security plays an important role. And that's why it has become a very, very important focus in financial industry, because it addresses security, it is accountable, it is going to be making things very efficient in a secure manner. That's why people are adopting blockchain for all of the technological advancement in finance.
Okay, great. So I am combining two questions asked by Mr. Suleiman and RMX 2030. I don't know, maybe it's his nickname. Which is the best investment method and instruments, or how do you choose a best investment portfolio? So I'm just combining these questions. So
okay, so if you are for investments, if you are not a savvy investor, or if you are not into if you are not a day trader, if you are not closely into the investment technology, the best thing that you can do and be very safe is invest in the market. But saying that, I will also say this is not a good time to invest in the market. And we know why it is not a good time. Because of the economic downturn, we cannot trust the market. But on an average, if you have long-term investment, the best investment would be looking at market index funds and that would be the best way to do that. And also, if you are looking at portfolio kind of investment, it depends on what is your personal need, what is your, what age group you are, and what is the main reason you want to invest. It has to be based on that. If you are very risky, then you need to invest in aggressive investments like stocks, and a lot of stocks and a small percentage of bonds. But if you are very risk averse, then you change your balance. So it's not a very simple question as to what to invest. If that is a question that I can answer, I will do it myself day to day. But it depends on your personal situation, what kind of investment, what age group you are, how much money you have, and how much risk you can take.
Great, great. So, do people need to pay back the crowdfunding? This is from Vachala Chalaya. How does crowdfunding work? So she wants to know that.
So the way that crowdfunding works is you are getting a small amount of money. It's microfunding from a large group of people. And the one theory in finance is reducing your risk by diversification. That exactly is what is happening in crowdfunding. There are different ways of crowdfunding. One is donation based, and one is reward based, and one is equity based. So equity-based crowdfunding, a person is funding because they will have an ownership on your idea. And donation-based is just that they're donating for your idea. And what's the other one I said? I'm blanking out. Donation-based, reward-based. Reward-based is you are going to be providing fund for a certain reward. So there are three different kinds of crowdfunding you have. So because you have all of these options, you can choose your option. And because you can choose your option, and the amount that you're investing also matters, right? In crowdfunding, it is microfunding. You can choose the investment, and then that's pretty much it. You know your risk, you know how much return you're going to get from the crowdfunding. And that's what makes it very exciting, because a lot of ideas, they are not being pursued because they do not have funding from a source of fund. So crowdfunding is making it so much possible.
Okay. So the next question is from Nagalata. She says, digitalization is picking up in India, and for finance, accountability plays a major role. Now, digital, unseen, not reliable, how tangibility is possible? So I think it's more of a security related question.
Security related question. So, the amount of exposure that I have from our Indian banking is when I look at my dad. He is always using his mobile phone to do the transactions, and he's having all of his transactions done on the mobile phone. And this has amazed me, because I know he used to go to the bank and brick and mortar bank to do all of the transaction. And this is how much technology has improved. But as far as compliance is concerned, it is I'm sure it is no different from the US, and all of these legalities are taken care of, and they have to be taken care of for it to be tangible and used by the public. And if that is not the case, then this is not possible. Like, technology is possible, it's not possible. So that is one of the things that I was talking about when automation is concerned. Compliance becomes a very important role. It has to take the concern, right? Compliance becomes a very important concern. And so now we need human interaction, in that sense that humans need to manage this issue, and they need to make sure that automation is done properly in order to address the compliance.
Okay, so this is done. We have two questions on blockchain. I think I'm not able to understand, so I'm not throwing it open to you.
Well, let me tell you one thing for sure, that I do not know myself. I do not know blockchain that much, because I have not worked in blockchain, and that's my knowledge on blockchain. Yeah.
So, I mean, there is a lot of confusion in terms of blockchain as a security, and they're comparing it with the banking ledger or something. So that's the reason I'm ignoring a few.
Oh, okay.
So ignoring these
Huh.
questions. Okay, do you agree? Okay, so hacking in the hackers in the fintech business. So this, how do you address this challenge?
Well, cyber security is number one issue, and hacking is a big problem. So that is where blockchain is actually helping you, because it is going to be helping you make this more efficient. And not only blockchain, artificial intelligence, it's bringing in alerts which will warn customers even beforehand, even before anything happens. For example, my credit card company will call me if I'm going out of station to some other place which I have not visited, and I make a transaction, to make sure that it is me who's doing the transaction. This entire process is because of automation and the data use. It is sending an alert. It is making sure that this kind of security is happening, so hacking will not take place in the first hand. So it is a mechanism to prevent hacking. So that is a prevention that is happening to make sure hacking doesn't happen. And that's where technology is going to play a major role. And as far as blockchain is concerned, one of the main features is going to have is encryption. Encryption is going to block cyber attack or cyber, it is going to enhance cyber security.
Okay, great. So can you just throw some light on the cryptocurrency? Is it going to be the next disruptive system of, I mean, technology, or you call it currency? How do you think crypto is going to be?
Yes, of course, it is going to be the future. Cryptocurrency is going to be a future technology. Like I said, Satoshi Nakamoto, who came up with the cryptocurrency, there was no motivation behind that. He just came up with this whole technology, and so what it has led to is making eliminating all of the intermediaries in a peer-to-peer network. So the transaction between two parties will usually go through a network of financial intermediaries. Now there is no need for that. And that is possible because of cryptocurrency. It is going to go from point A to point B, surpassing all of these, eliminating all of these intermediaries. And that's what makes it very cheap, I would say, less, very effective. And that's how much I think is going to be a valuable, input that blockchain is going to bring, as far as cryptocurrency is going to bring, as far as the industrial improvement.
So any of the banking channels or banking systems or banks using blockchain currently?
Well, I did because my work experience has been 6 years ago now. I have more into teaching. For this particular reason, I did talk to a project manager in Capital One. And this is the input that I got from him. And he said that blockchain is still, it is out there, but they have not adopted it. And Capital One is number one, one of the few number one banking financial industry in US. So they are still in the pilot version, and they're looking at bringing about this advancement, but it is not still there. So that's where blockchain is right now.
Okay, the next question
it's an emerging technology. Yeah,
great. So the next question is more in terms of the Indian context. I mean, the need for the fintech is there, but we don't see a lot of initiative by the financial companies here to move to the next level. So what do you think are the challenges behind that? Why is it that people are not adopting?
And the reason would be they do not want to let their legacy system go. And that has become, that is one of the biggest challenges that industries have. If they have a legacy system and they do not want to let go of that, they do not want to bring about the change. That's the reason that I brought in the term disruptive technology. It has to come in, it has to break through all of the technology that is currently in place. So it is a big challenge to bring that. It is not easy, but it has to be adapted. And there will be a point where people will start adopting, but those at that time, it's going to be, they will be classified as laggards or late adopters, when whole of the industry is already so in and running, and these people are just starting to the adoption process.
Great, great. Okay, how can financial institutions and insurance companies, okay, make aware of these emerging technologies to the rural people? So again, it's more of an Indian context. So how do they do it?
That is also a very challenging aspect, like bringing education. That's why that has been like, that can be possible only big people like us who are educated and who are going forward to be very informative and spreading the knowledge. And that is spreading financial literacy among people who lack that, because that is going to be an important issue in the future, right? Economy is driven by finance, and if everybody is aware of that, we will be able to manage the finance much better.
Okay. Okay, again, this is a very interesting question. I think you addressed it in your presentation. The question is robo-advisory or robots being used in the financial services. Is it going to affect the human resources, and will it be effective? I mean, using robots instead of humans.
Well, they are using robo-advisors now, and especially companies which are offering retirement systems, they have robo-advisors, because all of the employees, or not all of them are comfortable investing on their own. And in that case, they need help, and they look for robo-advisors. But what is the challenge with this is not robo-advisors are going to be following an algorithm. They will be following questionnaire, and they'll have a way of doing it that's not going to capture all of human emotions. That's where we come in. We come in the sense that only humans can understand humans, and we can understand what is the real needs of an client, and we can address that. As I said, investments is going to be one field where we will be still needed. Our expertise will be needed based on the individual behavior, finance, psychology, and all of that plays in making a decision.
Okay. Okay, your opinion on digital investments. I don't understand what it is. Maybe you can answer.
So what I think they mean is online investment or a digital investment, in the sense. I'm just thinking what they really mean is. I don't want to assume anything over here.
Okay.
So
We will just park the question aside for some other time. So, okay, unskilled labor force to improve their technical skill. Okay, so the question is, since everything is going fintech, or I mean technology, should the unskilled laborers go technical also? So that's what I think of the question.
so unskilled in the sense, if you are not having a technical knowledge,
Yeah.
and you want to be educated in technology, but is that the question?
Looks like yes.
Okay, so as far as my experience is, you have to keep up to date with your field, be it finance or technology. Adding value, or adding being valuable resource, is going to be based on how much knowledge you acquire, how much skill that you have. So always it's always advisable to enhance your skill.
Okay. So the next question is, would like to know about algo trading. How is it evolving, and suitability for the Indian capital markets? and especially in financial planning. So is algorithmic trading, I don't understand. What is algo trading?
I think it is algorithmic trading, and algorithmic trading is again, it is something like a robo-advisor where trading is done automatically based on your, and whenever you talk about trading, it is your investment, right? And investment is going to be based on how much resource that you have to allocate and what kind of risk appetite you have. So there are several factors involved in it. And just plainly looking at algo trading and then blindly, having your money invested in it is not advisable. You have to look at the legitimacy of the algorithm. Is it going to address your risk management? It is going to manage the asset for you properly. So all of these checks have to be done before you trust that. And it is all dependent on what kind of results or returns that this algorithm are going to give on your investment. So it really depends on what kind of trading that you're looking at, what kind of algorithm it is backed up by, what is going to have, what variability, or what parameters is it addressing on all the other issues.
Great. Okay, I think this will be an interesting question. As a tutor, lecturer, what is the course I should do to become a project manager?
Well, I think project management is a different deal. Like you have a set number of courses that you need to take. I do not know that, but I know what courses that you need to take if you want to become a financial planner or anything to do with finance. I know, but project management, I'm not very familiar with that.
Okay. So I'll skip the next question. We'll go to what will be the impact of fintech on the personal financial management? I think you have already answered. Would you like to take that again?
Yeah, personal financial management is one field where fintech is, it will help with the investment part of it, but personal financial management is more going to be based on the emotional, or the psychological need of a person as well. So that's why financial planners are also called financial counselors. You know what counselors mean, right? Like they are going to be personally involved in in that client's life, and then they make a financial planning for them. So as far as fintech is involved, what it can do is it can have tools ready for making best investment plan in terms of financial planning. But to have a comprehensive plan, you definitely need a financial planner to interact with the client.
Okay, so the next question is, this is done. Okay. Does fintech have any drawback? Will it groom our personalities? Would you like to take that?
No, I mean, this is an emerging technology. We haven't gone that far as to whether it has drawbacks or fintech is finance and technology. And I mean, I will say that it doesn't have any drawbacks.
True. I also agree with you. Okay. Okay. So okay, this question is interesting. Concepts like rationality from behavioral finance has been there in the finance for analyzing investors' behavior. And so how do you see it as different from behavioral finance of today that we have been taking? So,
okay. So when you say rational investors, that itself is not correct. Investors are not rational. They're irrational. And that's why we have this whole field which is talking about it, that is behavioral finance, which addresses the psychology of investors. And behavioral finance is going to have anything from all of these different terms like overconfidence, confirmation bias. It is having all these different terms to describe investors. And this, okay, again, what was the question? Like, can you read that
I
again?
mean, the rationality from behavioral finance, how is it in today's terms when the robos are being introduced? That's what I understand from the question.
Okay, so I have a feeling this question is going towards the idea that when robots are using this automated technology, where is behavioral finance coming? And
Correct.
that's where we as a human have to be there to address this behavioral finance. Robots cannot do this. They only follow algorithm, and they are going to be taking, and this algorithm is based on data driven algorithm, and this AI itself is a learning process. It's learning as good as what we input it, what we feed it, and our input is needed, and the number of data which is fed, that makes a decision. So that is not how human psychology works, and that's where human behavioral finance happens. And behavioral finance makes it a lot more complicated for AI to work. They cannot address. That's one area where AI is not excelling, and that's an opportunity for us because we have our expertise there. That's where we can challenge AI.
Great. Okay. Two people have asked a similar question. Is there any particular course or an university you would recommend for learning about financial technology? I mean, fintech learning?
I am not aware of that. I'm sure there are a lot of courses available, but now that I would say that now that you know where fintech is going, you can do your research, because I personally I do not know uh, whether you have what is available in the Indian market or even in the in our market where you have because university studies, we have not brought in fintech. There is no finance and technology as yet, because it's completely two different fields. One is technology, one is finance. So that's why you bringing in the knowledge of both technology and finance, that will be helpful in going about with fintech.
Okay, great. So the next question is in terms of Bitcoin is just a new technology gaining popularity. So how does this blockchain have an instant application in a lesser developed countries like India? Okay, so I don't agree with it.
That has been that has been the challenge, right? Because blockchain is not adaptable by all businesses, even especially the small ones. It has to be developed from scratch, and we do not. If you do not have that kind of sophistication, it is very much impossible. So what has to be done is it has to be coming out in a form that every industry can adopt it, and every industry has a platform where they can make use of it, and that is not available yet.
Okay. Is the current situation, the pandemic situation, made it challenging for the banks in terms of the financial management?
um, well, it has to be. Not only banks, but all kinds of industries have been affected by this, be it a financial industry or a non-financial industry. Every industry has been affected by this pandemic. And what is surprising is as I said, all of the finances is the same, be it a corporate finance or personal finance. I usually advise on personal finance that you should have an emergency fund for at least 3 months when you are out of employment. That's my advice to the clients, but that goes with corporations as well. And you will be surprised, even the biggest firms in US, they have as much as cash to manage only for 3 months of their business. And most of the small businesses which are not able to do that are going bankrupt. And that goes with all of the financial industry as well. And one thing with financial industries in US is that Federal Reserve is going to help them. If they have a problem, they will step in, they bail them out, and they provide the funding for them. And they have been doing that to boost this economy. What they have done is they have started buying corporate bonds and pushing money into the economy in order to help corporations, and also which includes all of the banks too. And that's one thing that Federal Reserve is doing.
Great. Okay, how is peer-to-peer lending risks managed for lenders? Who are top players in this area at this time? Okay, I think this is more
So
of
the
an Indianized question.
Yeah, so the peer-to-peer lending that I've shown in the slide, it's micro lending. Micro lending where you choose the amount that you want to lend. And the way that they manage risk is because of the fact that you are in control, you choose how much you want to lend, and you also choose your risk. And it is going into a big pool, and that is a diversified pool that actually reduces the risk. And that's how it works.
Okay. Okay, did the financial studies to prepare future financial? I'm not able to understand, but I'll just read out as it is. Did the financial studies are ready to prepare future financial planners? I think the question is more in terms of
Yes.
Yeah.
So the question goes like
I'm not able to understand, follow, but what I could make out by just studying financial studies or financial planning, can I become a financial planner? If I were to put it, I would put it that way.
So for to become a financial planner, at least in the US, you have to go through 6 areas of expertise, 6 areas of core topics, that is retirement planning, estate planning, investment planning, insurance planning, fundamental financial planning, and investment, I told that, tax planning. So if, yeah, 6 areas. And once you finish that, and then you take a exam to be certified as a financial planner. That's how you become a financial planner.
Just for your information, I am a certified financial planner.
Oh, wonderful.
For engineering. Okay, are you suggesting blockchain technology for engineering students?
I'm not suggesting that. I mean, like that would be, as it is, like to add that to the curriculum is up to the institution. And what I'm saying is that is going to be the future.
Okay. Okay. Do you think fintech as an innovation, future of money, or mode of bringing social change? So
it's going to be both. Future of money, which is going to be affecting the social change, right? Money is economy, and financial industry is, and financial market is driving the economy.
Great. Okay, please suggest some courses about risk management.
So when I started working in risk management, my background was only finance. I did not take anything in particular to get into the risk management. So what you are expected in a risk management is not a risk management course as such, but you take the fundamental knowledge of finance and then you apply it in risk management. And once you go into the department, it's a different it is a different the terms that they have or the language that they speak itself is different. There was 3 intense months of learning how to do risk management and how the terms work. So as such, if you have fundamental financial knowledge, that is more than enough for you to get into risk management.
Beautiful. Beautiful. Okay, how can digitalization spread across the uneducated? Again. So I'll skip the question. The smile says it all. So fintech and banks, is it a merger or a competition?
Fintech is a technology which is driving the financial industry, and banks is one of the financial industry, right? So the sooner that banks are going to be adopting to this, it's going to be beneficial for them, although the initial phase of adoption is going to be challenging. But what they will be seeing in the once they adopt it is efficiency, lower cost, lowering their cost, and also improving their security, and a lot more benefit.
Okay. Whether the government has any initiative to popularize the latest technology in the sector among common public. Okay, I think we will skip this question. Okay. Is the finance what we learned as a subject and the finance that we practice in job one and the same?
This is a very good question, actually. What we learn as theory and the job is, I will tell you, you're going to be learning a lot in your job. What you're going to be taking from your studying finance is the basic fundamental knowledge. So what I tell, when I have interviewed a number of people when I was working as a, in the financial industry, and the way that we will choose the candidate is based on their knowledge of finance. We are not going to be choosing someone if they do not even know, they do not even have the fundamentals of financial, theories and financial academics. You need to have that to build. And the only place that you will learn it is university. University provides a learning. Work is going to give you a different other learning. It's going to be, you're going to be learning a different, deal there. But what you will learn as theory and what you will take resourceful knowledge is going to be from the university. So it's going to be a different way in both ways, like, work and studies, but what you are learning is going to be much valuable when you start working.
True. Okay, specific to gold, is the current situation the right? I mean, maybe investing in gold more profitable? Will it make more profit?
Yeah, well, gold is one thing which has a negative correlation to the market. And that is, if you have a portfolio where you have gold in your portfolio, you would see that gold is doing well. It is kind of keeping your investment alive. So because it has a negative correlation with the market. So it is a good investment and to have in your portfolio.
Okay, so I think I'm going to skip a few because we are just 4 minutes away from our committed time to end the thing. Something to do with current, with the current pandemic situation. What is the future of fintech? I think you already addressed that. Okay, present situation to have what should banks do. Okay, what should the banks do to reduce their credit risk in the current situation? Would you like to take that?
So one of the things that banks are doing is they are being very strict with the with their loans, right? If they do not have a proper checks and balance in place, and they do not have checking their clients on the credit history, then what would end up in having is they will have a lot of bad assets. And that's what happened during the financial crisis. They what they did was they lent to people who did not afford to pay money, all the mortgages, and that bubble crashed in subprime crisis, and that led to a big crash in the financial industry as such. So they have to have a good risk management system where they are able to check the credit of all of the customers. And as far as the investments that the banks themselves they are having, they should make sure all of their investments are safe. And that's one thing that, and the way that they do it is they have to look at their risk exposure, and they also have to make sure that they are able to make their payments to the counterparty. So that was one of my main duties when I was a credit risk analyst. Look at the exposure for loss if there is a loss of there is an occurrence. And this occurrence is, we have a separate engine that we use for coming up with a calculation of loss, probability of loss, and also making sure that the bank has enough reserve to take care of their loss.
Okay. So India is still lagging behind in providing cyber security. What do you say about the future of digital transactions in India? I wouldn't
Well,
know.
I'm going to skip this question because I'm not familiar with this.
No, if I can take it, I don't think
Yes.
we are lagging behind in any cyber security. Yes, the
Mm-hmm.
threat is new to everybody. So I think we are in par with most of the Western, countries.
Mm-hmm.
But adaptability when it comes to the ground is a challenge because people are afraid to go online and do banking and all that. So I think we'll end it there. Okay. The next question is, what are the courses to pursue to become a financial manager? I think you addressed it. Just to hint in the Indian context, I think we should look at mutual fund advisor unit 1 and unit 2. There are 2 exams. You can take those exams. There is certified financial planner CFP course, which is given by the Financial Planning Standards Board from US, directly monitored by them, and exams conducted by them. You can take a course in that. And apart from that, there are a lot of small 1 month, 2 month courses uh, uh, for mutual funds. So you can go ahead for that. I think that's what I would take it in terms of the Indian context. And if you have
Okay,
any
great.
other course to add, please suggest.
Generally, like, what we have over here for students is investment planning, advanced investment planning, which will have everything from valuation of assets like stocks, bonds, and derivatives and futures and options, and also the all the derivatives, which are like mortgage-backed securities, CDOs, and credit default swaps, and all of that. So that is one area that they can look at as investments. And fixed income securities, that has become a very important, highly demanded course. And financial planning has been, I was very surprised. Like, I have a lot of students who are taking fundamentals of financial planning in the university, because now, especially with the pandemic, everybody is like, they want to manage money. Financial planning, like you becoming a planner for yourself, it becomes a crucial skill that you need to have.
Great.
So
The suggestion what you gave about the investment and the derivatives learning, that course equivalent in India is that MFD course. So they have 2 stages.
okay, got it.
So
Okay.
they have 2 stages. So you become that, and then you can start advising clients. Otherwise, you
Okay.
are called a product seller. But if you
Mm-hmm.
want to be able to advise the client, you need to have this course or a CFP, and they have few more courses which they recommend. So I think that brings us to the end of the Q&A section.
Mm-hmm.
36 questions got. Okay, so that shows your expertise. So can I have Dr. Shalini and Sujata ma'am and Aruna Devi to please switch on your videos, please. I think we have exceeded by 2 more minutes. So let's yes. Yes, ma'am. Anything you want
I
to share?
mean, yes, it was a wonderful session, and it
Oh,
was
thanks.
mind blowing. It was mind blowing, and
Oh,
yes, I do appreciate the participants for having raised such interesting questions. And I'm sure, as I had mentioned in the chat, somebody's question is another person's learning. So I'm sure all of us learned something more, and this webinar has been a great platform to share thoughts. And I'm immensely thankful to you, Ms. Leela, for being with us.
no, thank you. I
And,
have to thank you for giving me this
oh,
opportunity.
but
I
it's an
really,
odd time for you. It's an odd time
no,
for you. So thanks a lot.
Hey,
And I really express my thanks to Dr. Aruna Devi and Ms. Sujata,
thank
the
you,
panel,
ma'am.
my
okay.
co-panelists for
In
being
the
here, and
series of
Mr.
thanking
Radesh too.
people, in the series of thanking people, I think we have missed out a very important person. Uh, I hope he is there online. Mr. Surya Deepan.
Yes, yes,
He's
I
the
was
one
going to
who
say,
connected
he's the
Sujata
one
with
who suggested,
Miss
yeah.
Leela. So he's a Six Sigma black belt, plus he's the web services manager at Northern Sydney Local Health Department. So a
Yeah,
big shout out to
we
Mr.
are
Surya Deepan.
classmates from Satyabama Engineering College, and
Great.
when I
Thank
couldn't
you.
refuse
Thank
when
you,
he
Mr.
asked me.
Surya Deepan. Someone, if they can cover the entire gamut of blockchain to robo-advisory to the banking system in 48 minutes, I think you suggested as the right person. So thank you, Ms. Leela, for this wonderful session. I will have to go back and watch it again because I was doing a lot of background work, so I had to miss few of your, important talks. So I will go and watch it.
Thank you, sir.
Yeah.
Thank you, sir. Thank you for your
Thank you very
support. It
much.
was really a wonderful session, Leela ma'am. And I am actually out of this topic and this field. We are from the computer science department, but I was able to understand certain terminologies and certain things from your presentation. Thank you, ma'am.
Thanks,
Great.
Sujata. Yeah.
Thank you,
Thank you
Mr.
so much.
Suryadepan.
Thank you. Thanks a lot.
Thank you.
We'll catch up again. Maybe
Yeah.
you will have to develop a little advanced to what you have shared. So we will come back as version 2 very soon.
Yeah, most certainly. Thank you.
Yeah.
Thank you.
Thank you very
Mr.
much.
Thank you.
I'll
Thank
get
you,
the
sir.
presentation.
Thank you, Principal
Thank
ma'am.
you.
Thank you.
And
Bye.
for all the participants, a small housekeeping announcement. The feedback forms will be shared to your email ID. You can just fill in the feedback forms, and then the certificates will reach you in about 3 to 4 days. Give us time because we have 3 webinars aligned. Apart from this, 2 more today evening and tomorrow. So once all these webinars are done, we'll be processing the certificates. Hopefully by Monday, you should get all your certificates. Thank you very much. Thanks a lot.
Thank you. Thank you.
Thank you.
Bye.
Thank you, sir.